Yo, yo, what's up, my people? How y'all doing? Welcome to another episode of Black Diamond FX Trading. All right, so tonight I'm just gonna be doing just a little bit of back testing. Looking to see some moves that we had in the market today. Back testing the strategy that we use, the candle range theory, liquidity sweep, AMD. All right. So for those of you that are not familiar with the strategy that I've been using for the past several years now, all right, I look for liquidity sweeps, all right. Um, I trade liquidity sweeps. First, I come on the higher time frame. It could be the 4 hour, it could be the daily, it could be the weekly, it could be the monthly. Most of the time, I stick to the 4 hour. All right. So, and I also look for the direction that the market is moving in. So here you can see the market is bullish. And when the market is bullish, I am looking for sweeps on the bottom side. All right. Sell side sweeps. All right. Also, what I like to see is the sweep or the manipulate, because the sweep is just a manipulation if you're talking about AMD. And AMD is accumulation, manipulation, and distribution. All right. And the sweep should tap into an order block, a fair value gap, or some kind of other point of interest. All right. So let's take a look at this. This is NQ NASDAQ futures, right? On the 4 hour chart. And as you can see, we have I can see we have accumulation here and manipulation here. Manipulation is the sweep. Now, on that, what you want to see is this. Let me make this a little bit bigger, bring you up, make this a little bit bigger, bring you down. So this is what I look for when I see a liquidity sweep. You see how we have this bearish candle right here, right? So you see we have this bottom wick and this top wick. And the very next candle swept the bottom wick and then went back inside of the previous candle's range. That's what we look for. All right. That's what we look for. All right. But look, check it out. Because you're going to see it before this even happens, before this candle even closes. But you will see it go back into that candle range. All right. So what we do, the candle that got swept, say this was the 1 a.m. candle, got swept by the 5 a.m. candle. So we're going to mark the low that got swept, and we mark the high of that candle. All right. And when you trade in the direction of the market, the high of that candle will be your target. All right. So we got that down, Pat. We set the chart view. Now let's go down to the 15-minute chart. Because now on the 15-minute, we want to see price dip down. Now you can clearly see price swept down into a fair value gap right here. All right. This candle right here has a little tiny wick on top of it. And this candle here, we have this bottom wick. And the gap is in between this top and this bottom right here. And the manipulation, which where we got our sweep at, swept down into that. So that's our higher time frame, our higher time frame point of interest. All right, now let's go to the 15-minute and see what we look like. All right, so on the 15, hold on, let me turn off a moving average right quick. All right, so on the 15-minute chart, here's what we got. All right, on the 15-minute chart, this is where our sweep occurred, right down here. And as you can see, accumulation, manipulation, and it started distributing right here. All right. Now check this out. Now on the 15-minute chart, here's where we start to look for our interest. Now you see on the 15-minute chart, we got a little smaller sweep right here. This little smaller sweep can be our order block. Check this out. We mark the bottom, which is already marked, and the top. All right. This is our entry. This is our entry area. Watch this. Let's go down to the 5. All right. Now look what happens. Okay. Price came up. It came out, came right back in, tapped into another smaller fair value gap. We put our stop loss down here. We enter right up in here. This will be our prime entry right up in here. Right here. Some people call this change in the state of delivery. You can mark this candle. I like to mark it right here. It's all the way to the bottom right there. See where it tapped back in? This is your entry right here. And if you notice, price never came back to it. All right. This was a for me, this was a $1,700 trade. Excuse me. Up to here. 1,700 from here to there. All right. I think 17. Hold on, let me see something. 21, 150. If I do a buy limit, that's 21, 150 to 21, 250, 250. Oh, 2,000. My bad. I'm sorry. Well, point 0.5. All right. Wait. Hold on. My bad. Point 0.5 right here. All right. $2,000.10. All right. Now it was 1,700 for me because I got out a little. Well, no, I got in. It was 1,700 for me because I got in a little bit after. I got in around here somewhere. No, my bad. I got in on this order block here, right here. That's where I got in there. That order block came. All right. And what I did, I put my stop. I gave it some breathing room. You always want to give your trade some breathing room because stuff like this happens. All right. See this order block? See how it dipped down below? So I just put it like about right here. All right. And price went up and gave me $1,700 on a day. All right. Let's take a look and see if we find another. Let's take a look at ES was pretty much the same. S&P, ES, this is ES right here. All right. If we go to the 4, go all the way over AMD. See, I marked it out, and I marked this out for my students to see the accumulation, manipulation, and the distribution. All right, this was the accumulation, manipulated, boom, we distributed right here. This was our distribution, this entire move. All right. And see, you have to know how to use all of your trading skills, everything that you've learned, and put them together. All right. I learned about AMD. I learned smart money concepts, candle range theory, liquidity sweeps. I learned all that. All right. Well, actually, liquidity sweeps. Um, I didn't know nothing about liquidity sweeps. And let me tell y'all, y'all probably heard me say this before, but look, I was struggling. I remember I was struggling in trading. I was still trading Forex at the time. I hadn't started trading futures yet. And I'm a man of God. I pray. I spend a lot of time talking to God, praying to God. And I believe that God answers prayers. And one night, I was just frustrated, man, because I was struggling with trading, and I'm like, I said, God, man, I know I can do this, man. It's like I see all these people trading, they doing it, you know what I'm saying? Like, I know I can do it, man. It's like, and I asked God to show me what am I missing? Because I knew I was missing something. I didn't know what, but I was missing something. Because at the time I was trying to learn, I don't know if you guys heard of Wyckoff theory, but I was trying to learn Wyckoff theory. And it was like Greek to me. It was Wyckoff was Greek. It was hard. It was real hard. But something stood out to me. The what they call it, the pretty much is the liquidity sweep. I forgot what they call it, the shakeout or whatever. I forgot the term for it. But I asked God, I'm like, God, I need you to show me, like, what am I missing? That very same night, God showed me a dream, right? And it was liquidity sweeps on a daily time frame. Daily liquidity sweeps, just like I trade candle range theory. All right. But I didn't know nothing about candle range theory. Matter of fact, I just learned about candle range theory this year. Now, picture I had this dream like, what, 3 years ago, like in 2021. All right. So I started trading it. And when I tell you, I was started killing the markets. I mean, absolutely killing the markets, man. And, I just from that point on, I just started incorporating other aspects of trading that I learned over the years, and just started getting better and better at it. And then once I saw this candle range theory on this year, and the guy was talking about AMD, and I'm like, oh man, it's like it makes sense, and it just like everything just kind of came together. But that's the way I trade now, and I'm telling you, man, like I'm teaching it to my students now. and they are absolutely loving it. You know what I'm saying? They are loving it. They can spot the accumulation, manipulation, distribution. All right. You know, they can spot the sweeps. I had one student started in August. She started in August, just this past August. And let's see, September, October. October, she was making withdrawals out of her futures prop firm account. And she just started trading in August. All right. So let me tell you, it works, man. It works. It's amazing. And you know, when I teach, I try to keep it simple. I simplify it as much as I can for my students because that's how I learn. You know, keep it simple and you know, you're gonna understand it a lot better. You're gonna understand it a lot better. And then once you understand it, you can kind of start introducing looking at it from a more complex perspective. All right. And all those complex perspectives are going to start making sense. All right. But that's the way I teach. All right. So let's take a look at, let's see what else we had going on. I did look at gold. Yeah, I did look at gold. See, I marked it out. I actually marked gold. Let me see. I should have put it right here. I didn't trade gold, but I marked it out. All right. And gold came up to this order block right here. Now, this trade here was going against the trend because you see the market structure was bearish. And one thing, when you trade candle range, when you trade this strategy, what you want to do if you're going against the trend. Now, I don't suggest you trade against the trend, but if you do, I would only target maybe about 50% of that candle range. All right. Because the market will turn around and it will come back on you. All right. So I would mark 50% of here. Boom, boom. My premium and discount. All right. 50%. That would have been my target. And as you can see, 50%, it came up, hit this order block right here, and looked like we about to start coming down. See, it came down. We broke structure here, hit another order block right up in here, and the market is starting to come back down. So that's why I suggest if you trade counter trend, only target about 50%. All right. And that's why I prefer trading pro trend because pro trend, you can stay in the trade a lot longer. And let me tell y'all something. A lot of people trade prop firms and you know they have these thoughts about consistency rules. Consistency rules are for people that like to get those prop firm accounts and just try to make a quick flip. Let me tell you, don't be scared if it's 10%, 1%, 5%, 100%, whatever the consistency rules is. Do you stick to your plan? If you make $5,000 a trade, if you averaging $2,500 or 5,000, whatever keep on doing it. All that means is they want you to be consistent. They want you to try to consistently make around the same amount. All right. Now the only thing that you know it really affects is if you have a big runner and you go way past what you consistently make. But honestly, with me, I average about 15 with each contract, especially with trading NQ. With each contract, I average about $1,500. All right. Um, I normally trade about two contracts depending on the prop firm, then the size of the account. $250,000 account, I use about five contracts. All right. And I try to keep it around that because let me tell you, man, that money it adds up quick. And those withdrawals are pretty nice. They're real nice. All right. But if you stick with a consistent contract size and once you make your payout, you know, and as your account grows, you can scale up and just scale up. As you scale up, you know what I'm saying? Your consistency is still gonna be the same, but you're just gonna make more money. All right. But yeah, but looking at this gold trade, okay, so this was the 4 hour. So as you can see, all right, so like I said, this was counter trend. So we marked the bottom and we marked the top. And see, this is where we got our sweep at, okay? So we had accumulation, manipulation, and a distribution all the way up to this order block. Now let's take another look, a closer look. If we go to the 15-minute chart, let's see. All right. And look what happened. See, it came up, spiked back down into filled this fair value gap right here. All right. almost tapped into an order block, but it did fill that fair value gap. And boom, look, never came back. Never came back. All right. And 50% of this, let's see, from here to here. All right. Now, this is my $250,000 account. So 50% to that 50%. Now, I didn't trade it, but let's see what I missed. Let's see what I missed. All right. 5 contracts. This way your contracts go right up in here. Limit from the order block right there. Fair value gap at 2658.10. 58.10. All right, halfway was right here at 2696.25, right up in here. That's a lot of money. 2696.25. Look at that, $19,100. And like I said, I didn't trade it. I only trade one trade at a time. And while I was in NASDAQ, that's the one I focused on. You know, I like to focus on one trade at a time. All right. But look, you can see just to here was $19,100 right there. All right. 5 contracts. So that just to kind of show y'all, man, look, if you learn to trade, you can make a lot of money. And this was in one day. You made 19,000 in a day. All right. Not even a whole day. This was like from here, let's say 8:30. Well, this was 8:30 p.m. on Wednesday to 8:15 a.m. on Thursday. Let's say 12 hours. You made $19,000 in 12 hours, man. Come on. Where you get paid at besides the NFL, the NBA, Major League Baseball, you know, one of those professional sports leagues. All right. But yeah, this is what I teach my students. And, you know, what I have them do at times is once they get it, okay, I have them teach it back to me, you know, just to kind of see if they got it. And if they got, you know, I correct them, you know, if I listen to them, if they make a mistake and, you know, we go over it, we take a look at it and, you know, we roll from there. And that's how we do, man. Black Diamond FX. All right, let's see if we got one more. Silver, I like silver. I didn't even look at silver today. All right, so I said I didn't look at silver today, but obviously I did. This was an entry I was waiting on, but we did get the entry. I'm sorry, I did look at silver. We did get the entry, but I didn't take the entry because it was end of day. It was close to the end of day. This was 1:30 p.m. All right. And look, I see these small candles. When you see these small candles like this, it's not a lot of trading going on. It's not a lot of volume going on. Not a lot of money being injected in the market. So when you see small candles like that, you don't really want to be in that trade. And you see, I only had it marked to about 50%. Why? Check this out. Look, because we bearish. All right. Because we're bearish. Now, it may go higher because it just tapped this order block right here. All right. So it may go higher. It may go maybe to this high, maybe even up to here somewhere. All right. But we'll see once the market opens on, Sunday or Monday. We'll see. But I'm going to leave that on. Let's see. One more. Let's look at Bitcoin because Bitcoin has been on a tear lately. All right. Now, Bitcoin, I can look at this right now and I can see this is going to come down. All right. Because I see the accumulation. I see the manipulation right here. Now, when I see the manipulation or the sweep, see, we got the sweep at the manipulation. I like to see that manipulation, that sweep go into some kind of, like I said, a point of interest like a fair value gap order block or something. But this was an all-time high on Bitcoin. So it didn't really sweep into anything. All right. Now, although this is a bullish, bullish engulfing pattern, this is going to go up, but this is going to come down some, maybe to fill this order block to this order block here, maybe down here. Our trading range is from this low to this high. Let me show you something. This is how I see about where price is going to come down to. And I would say maybe about this order block right here. Watch this. I use what's called optimal trade entry. Well, it's my Black Diamond All-Star fibs. Look at that. In between the 0.62, 0.79, and look where that order block is, right up in there. So I'm looking for Bitcoin to come down somewhere up in there for you Bitcoin traders. For you Bitcoin traders. You want to buy Bitcoin? I say wait until it comes down somewhere between 70,750 and 69,130. All right. And then buy again. You should be good. We break structure right here. All right. We respecting these lows, breaking highs. We are bullish on Bitcoin. So I'm looking for Bitcoin to come down to about 70,750. People probably gonna think, oh, Bitcoin dropping. Bitcoin is just gonna pull back. That's all it's gonna do. It's gonna pull back and then go on about its business. Let's see what the daily look like. See, we got these sweeps up here on the daily as well. And see, we are bullish as well. See, we respecting these lows. All right. The weekly, we had a sweep right here and then it shot up. All right. So yeah, I'm expecting Bitcoin to continue up. Even here, I can see accumulation, manipulation down here, got a sweep down, fill up this fair value gap right here. Matter of fact, more like a balanced price range because we got this fair value gap that was unmitigated and this one. All right. Look where it swept down, right to it. Swept right there. Boom, on its way up. Come on, man. This is what we do in Black Diamond FX. Y'all want to learn to trade? Holler at me, man. Send me an email. Hold on, I'm gonna type it on the screen for y'all. For y'all that want to join, want to learn. Black Diamond FX at yahoo.com. Or you can hit me up on Instagram at Black Diamond _FX. All right. Instagram. Hold on a second. Email. Boom. Instagram. Boom. There you go. Holla at your boy, man. This is what we do. Like I said, this is what we do. Easy peasy lemon squeezy. I know that sounds a little corny. But still, look at that. Accumulation, manipulation down here, distribution. Boom. Easy. Man, come on, man. Once your eyes see it, you can't unsee it. And you're going to see it all over the charts on every single time frame. It happens on every single time frame. Accumulation, manipulation, distribute. Accumulation, manipulation. Where did it manipulate to? Fair value gap, distribution. Boom. All right. Holla at your boy. Deuces. Oh, and before I go, if you like this video, don't forget to comment. Don't forget to like it. Don't forget to subscribe. All right. Thank you guys for watching. And I will be talking to you guys later. Deuces.